So guys, today is day 4 of reviewing my trades for the next 100 days. On Thursday, which was the last day that I traded, I broke one of my rules and actually moved my stop mid-trade. It ended up causing what should have been a small loss in a very good week into a bigger loss. This is a review of that trade though, and I'll show you exactly what I did, but this is where we're at right now. So we're in the middle of a very tight bull channel coming out of the low of a wider bull channel. So this is how we looked coming into Thursday. I've got it in replay mode here, and the way I was seeing things is that we were in a bit of a bull channel. You can sort of draw it under the lows like that. You can draw it across the top sort of like this maybe. Either way, I see it as a bull channel, and so clearly looking for longs. And now if we go down to the day session hours on the 5-minute chart, you'll see that Wednesday was a bit of a swing day. And on this week, we've had a move up, a move down, and now a move back up. So you can look at this as just like a bit of a wider range. So coming into Thursday, as you can see though, we had this gap up. And so what I'm looking for is a gap up H2. It's a trade that I took on Monday and Tuesday. It's one of our better setups. And I also thought that if we got it on a sort of higher time frame level, if we were able to get any sort of continuation out of Thursday, it could turn even to maybe a bit more of a swing. You'll see that on the Tuesday overnight session, on the regular hours, we came all the way up to 55,110. So that's over 600 points above where we're going to open Thursday's price action. With that in mind, that was the sort of extreme target, if you will. And so the key levels that we've got marked would be where we closed yesterday, yesterday's low close, and also the high above on the day session hours, and then the overnight hours highs as well. So they're the clear levels above, they're the levels below that we're looking at. And so now let's just go through the trade, how it played out. We got the H1 here, and with this massive push down, I was definitely expecting the first push up from the bulls not to be this strong, but it's actually a pretty decent run back up. We get a new low here, and so the next 5-minute bar is the entry bar, and it's above this candle. So that was my entry there, and then I had my stop below this big bull bar, and that's a fair bit of room, especially because we've now gotten above the EMAs already. We've had this 7-8 bar bull channel, and so you really don't expect price to be able to get back down here if this gap up H2 is going to succeed. It can definitely pull back a little bit just because of this bear momentum, but it shouldn't get past there. Let's watch how it plays out though. So as you can see, the next 2 candles are weak. I'll just take this off so it's a bit easier to see. As I said, those next 2 candles are weak there. We are still above the EMAs, like I said though. So H2 has now had a failure with this strong bear candle, and that's already a sign that we're in a bit of trouble. Now you get this follow through candle, 2 really good looking bear bars in a row. In hindsight and how I've reviewed the trade now, this is a reason to get out. Like I said, you do have this bear momentum coming down, and so I was expecting potentially a deeper pullback, but to just go straight down and then down again so strongly like this should have been a potential concern. I did at the time think that this is still above 50% though, and we've had this really strong bull channel, so it's worth staying in. Like I said, I had the wider stop as well, but let's watch how it continues, and we just are getting murdered. And then we get this strong bull candle. From here, it's worth me staying in the trade. Obviously a strong bull reaction. It could just be a pullback on this, and then we go again. So it could create like a double bottom with a higher low or something. And then immediately a bear candle closing on its low. So at this point, again, it's a chance to get out before I even get to my stop. Follow up bull bar, and then a trading range candle. We never really get 2 bull bars in a row, and then we just sell off. So the trade should have been over here. And then by this point, I decided to move my stop further because I was worried that this could get taken out. In hindsight, if I'm worried that's going to get taken out, why wouldn't I just take the trade off? So that's just me being a little bit too greedy. This was showing me it was going to be a losing trade that we were having sell off. I knew it, and so I moved my stop. And so really, anytime you're moving your stop, you should probably be asking yourself, well, if I think I need to move it, then I think it's going to hit my stop, which means I should be taking it off. It sounds so obvious, but the fact that I've done this shows that it's never that easy during trading. It is something that will really hurt you though, and I certainly blew up on this. So not ideal. We take out that low, and then I ended up getting filled during this really big sell-off. It bounced a little bit, as you can see here, but then just continued to sell off. So it ended up being over 600 points down on the day. And now what I've realized is this was really just a test of this bull channel. So that's a bull channel. And if you draw it like that, there's most of the price action is within this bull channel, as you can see. And then we opened Thursday really at the highs of this bull channel, and that's why we got that sell pressure down. Your trade ideas aren't always going to be perfect. It did fit within my rules. It's a trade that was worth taking. The stop was in the right place at the start, and the trade management was just really bad. What did happen from there though? So this is what happened on Friday. That was the bull channel with the high on Thursday, and then Thursday sold off to here, and then Friday opened down here. Immediately sold off in the morning, tapped into this low, and then never looked back. 3,500 points. And now if you look at where Monday's opening, it is another 1,000 points up from there. So this is a very, very big bull run on the Nikkei, and we missed out on all of that simply because we had poor trade management in here. We just had to preserve our capital, have it ready to go for Friday. And this small loss, if I got in anywhere on this long, could have turned into one of the biggest trades that I've ever had. But that's what happens when you don't protect your capital. It's a bitter pill to swallow, like I said, talking about this. But I want to be open and honest as I share my journey on here. I want to show you not just the wins and the losses, but also the decision making and the reality that you are going to make mistakes. You are going to break your rules sometimes. What do you then do next? So from here, we move on. Monday is opening with a massive gap up. We are way above the all-time highs. So it's a very interesting position for us. I do expect some consolidation or a pullback at some point. This bull channel obviously can't just go on forever. But yeah, I'll be coming to you tomorrow with Monday's review. And one of the beauties about sharing this sort of stuff with you guys is that it gives me a little bit of extra motivation and accountability to make sure that I don't break my rules again. That is the biggest problem with Thursday's trade, is it's not the loss. We ended up closing the week with a lot more points that we made on the week than we lost. So overall, it was good trading. I made a lot of good decisions throughout the week. I executed on my setups. I became more confident in my playbook and obviously the gap up H2s. We had 2 gap up H2s succeed and 1 gap up H2 fail. It's good data to be putting into my playbook to now refine my strategy. And so overall, I'm looking at this quite positively. I'm really looking forward to trading on Monday. And as always, if you want to connect with us in our Discord, I'll leave a link down to that below. I've also had a few comments about the trades that I've made recently, and I really appreciate those. I'm certainly not sitting here pretending to be an all-knowing guru. I think it's very important that throughout your career in whatever you do, you're very curious and open to feedback. So yeah, after today's video, I probably deserve a bit of a roasting, but I'll see you guys in the next one and keen to bounce back.